What's up guys, Chad here. So I'm back with another trade recap, and today I want to go over how I knew to short the NASDAQ market today. Caught nearly an 80-point winner on this short trade. I'm going to be going over the exact market structure I was looking at and that key level that was very clear. If we break this level, we're going to see a massive drop, which we did on the NASDAQ and the S&P 500 today. So that being said, I'm going to break down the full strategy, show you guys the trades I took, so hopefully you can learn a thing or two from this video. So that being said, let's dive straight into it. I actually took two trades today. I ended up with a total of $2,000 in total P&L. Pretty much been averaging that every day this week. If we look so far on this week on my TradeVate account, let this load up. As you can see, I'm up around $6,000 on the week. So we have 2 more trading days of this week left. So anyways, we're on the NASDAQ market. I got a blank chart up and I'm going to show you guys the levels I was watching and kind of my plan today. So if we go into my software, what I use to actually get all my key levels and see the market structure, this will show you the institutional positioning in the market. Okay, so this will show you exactly where big liquidity providers, people who control 70 to 80% of market volume, market makers, right? It's going to show you where they're going to be buying or selling, right? It's going to show you the positioning of the institutions. And again, these are the people who move the market. So I like to buy when they're buying and I like to sell when they're selling. So if we go into this morning, I'm going to go into the replay mode. Okay, I'm going to go to the 22nd today. Okay, we're going to go to the first minute of market open. All right, this is what it looked like. Now, first few minutes, a lot of these flows can change as new orders are coming in right when the market opens, obviously. So we're going to skip forward a little bit. And as you can see, I'm mainly looking at this left side column, okay, this delta hedging. It's going to show where they're actually going to have to hedge their position. So as you can see, when we opened up, we had a lot more negative than positive, okay? So there's a lot more sellers. So negative means sellers. Now, usually the first 2 negative bars will try to be defended, especially if there's a lot of buyers on the market. As you can see, there's a bit of an imbalance today between sellers and buyers, meaning there is more sellers than buyers. And again, all these levels are based on QQQ because it's all based in the options market. Options is what actually moves the market. Zero DTE contracts. So this is what we look at, okay? Keep in mind, I do trade NASDAQ futures and I use a price converter that shows exactly where 609 would be on NASDAQ, for example. This is a free indicator. If you guys want to download it, just type in QQQ Index NQ price converter. Okay, that's what it's called, and it'll automatically plot all the QQQ levels on your chart. Now, if we look at today, right, we opened up, immediately sold off, and we started holding this 609. Okay, so let me zoom out so you can see. This is that 609 level we started holding. Now, again, since there is an imbalance between, buyers and sellers, wasn't really interested in there because, like I said, these first 2 negative bars will end up getting defended. Again, there was an imbalance, so I wasn't really interested in buying there. So if we keep going on, as you can see, price started moving up. We started getting actually more of a balance. As you can see, these positive bars started getting bigger. And typically the peak of the bars is where, market makers need to buy to. Okay, so today that was 612, right? So the first setup I was interested in today was a break of 611 to 612. Now, we never fully got that. 611 was acting as resistance. This is 611 on QQQ right here. We barely closed above it, and we had this wick on this candle, so I decided to stay out of that trade. And then we end up pulling back to this 609 again. Okay, and this was at 8:15 Eastern time, or I'm sorry, 8:15 Mountain time. So that's 10:15 Eastern time. If we look at what the chart looked like, as you can see, right, we started getting a more balanced market. And typically when we have a more balanced market, we're going to want to push up to this tallest positive bar, right, to the 612. So I actually got long after this move up once we reclaimed 610, expecting a move to 612. Now I got a pretty late entry, so I did size down on this trade, but this is my initial trade I was looking to take. And as you can see, we just completely lost it. Luckily, I was sized down a bit. I lost around $2,000 on this trade. Okay, so that was a red trade. Market structure pretty much completely flipped, and we end up breaking to the downside. Now, here's the thing about this institutional positioning. Once we break the first 1 or 2 negative bars, what's going to happen is volatility is going to increase because the market makers, liquidity providers, they have to flip all their positions, all of their hedges, and they have to sell, which creates more sellers, people chasing the sell-off. And then that forces the dealers to hedge to sell even more, right? Because they're providing liquidity, which means they have to buy contracts from the sellers, but then they have to hedge so they can stay neutral. So they have to sell more, right? It creates this huge snowball effect of selling. And this is why when we break, one of the first 2 negative bars, we end up getting extreme volatility, and this is kind of what happened. We get this massive quick sell-off, and we sold off, nearly 100 and something points, sold off all the way to this 606. I did not catch this big initial sell-off. The reason being is because I typically like seeing a retest, because what will happen sometimes is when we break that main negative bar, and then in today's case, it was 609, this line, right? What happens is sometimes it'll try to be defended, right? And then it'll retest, and then I'll get in after that retest, and then I'll take the sell off from there. I'll enter right on after that retest. Today, we just sold straight off, so I wasn't able to actually get an entry. But then, right, what happens is we started coming back up again, and now these big bars that we broke, the 609, 610, 608, right? These are going to act as resistance, right? So if price sells off and we got down to 606, which is this bar right here. Okay, this is 606, this bar right here. We bounce off of that. What happens is if we actually, bounce off of this level, what's going to happen is it's going to get stuck at one of these big bars, right? So think of these bars as resistance now. They were support, right? But now these walls or these big bars, right, are going to turn into resistance, and we're going to see a sell-off again, right? As long as we stay under these big negative bars, right? These are going to act as major resistance. So that was the second trade I took today that ended up making me around $4,000, paying for my initial loss, right? So I actually went short right here, okay, right when we got a breakdown after we rejected this same 609 level, okay? 608 could have acted as resistance as well, because as you can see, let me just go to this. It was a decently big bar right here, right? 608. But as you can see, pretty much no red candles there. We end up coming to 609, which is even better because now we get a better risk reward, because we know we're going to probably either come down to this low again, or we're going to break the lows and go to the next level. So I actually took it down to here to around this 80 level, right? So I was able to catch, pretty much from 160 down to 80, 80 point move, right? 80 point move over a 2R. Obviously, when you're trading with over a 2R, you're going to make up for your losses, right? So that's why I was able to end the day with $2,000 P&L. I can just show you my orders because I know people are skeptical, which you have every right to be in the trading industry. Okay, so as you can see, the initial trade was I bought 2 contracts going long at 819, right? And then I got stopped out at 824. As you can see, that was this trade right here. 819 went long pretty much right here, got stopped out at this 824. And then the next trade, as you can see, I sold 3 minis at 911. 151 was at the actual entry price, and then I bought them back at 86 around, 11 minutes later, 10 minutes later. So as you can see, that was that second trade right at 911 was my entry. So I actually got in a little bit lower right here. Okay, that's where I actually got in. So it was actually like a 1.56 RR, but I traded full size with the setup because I got a decent entry and I was super confident that this trade would work out. So anyways, guys, that was my trading session for the day. And this is what happens when you're seeing what's behind the charts, right? The charts are great. They can show you, all they do is they show you what price did. Okay, this is what candles represents, whether you're going on a daily time frame, a 4-hour, you're looking at yesterday's support, right? Whatever it is, it shows you what price action did. But when you're able to see the actual flows of the market, right, the institutional positioning, right, you're able to see what's behind the candles, and you're able to see what the institutions, the people who control market volume, are actually going to be doing, right? When we came back up to this level, okay, so I entered my trade around, what is that, 12 or 11 Eastern time. So let's go to 11 Eastern time, right? As you can see, right, if we look right here, we already came down to this 606 and we're coming back to these big walls. We're not going to go above these big walls, right? It's going to be very difficult for price to push above these big walls. Hence why we go exactly to this biggest wall, 609, and then we see a sell off to low a day. As you can see, we end up freaking falling all the way down to this 601 level, okay? And this is what happens when we enter this negative territory. Market gets super volatile. It creates a snowball effect of selling momentum, and we're only able to see this with reading the institutional positioning using a software like MaretkFlow. So anyways, guys, that was my trade for today. That's why I ended up making the $2,000 in total P&L. If you guys would like to get access to these tools and this flow, the software, just go over to otsflow.co or the first link in the description below. Like I said, this is my product. It's a little bit different, the way you read these bars, but I promise you, once you understand how to use them, it's going to make your trading way easier. Okay. Now, since this is going to be new to a lot of people, I actually work with all my customers. So when you become a member and join us inside of MaretkFlow, obviously you get access to the MaretkFlow platform and all the tools inside of there. I also trade live with you every single day, do real-time analysis, and you see my exact trades. We also do daily mentorship calls. So every single afternoon at 6 p.m. Eastern time, we go over the trades we took, we go over the market structure, exactly why price did what it did today, and answer all your questions. So anyways, if you guys do think this would be helpful for you, like I said, check out that first link in the description below. It'll take you over to our website where you can learn more about it. Anyways, guys, with that being said, I hope you guys had a great trading day yourself. I'll see you tomorrow morning inside the Discord group. We have 2 more days of trading this week. Supposed to have CPI on Friday. We'll see if that actually happens with the government shutdown. But anyways, I'm excited to trade the rest of this week. So I'll see you guys tomorrow morning. Hope you have a great rest of your day.